On our radar this morning is Pestec International, which bagged a 104 million ringgit contract from the Philippines National Grid Corporation. Kenanga is keeping its outperform call on the counter with a target price of 1 ringgit 15. The stock closed at 97.5 cents yesterday. To recap, Pestec has bagged its fifth job from the Philippines National Grid. Kenanga says this goes to show that the Filipino entity has confidence in the company's ability to deliver the project. The research house says pre-tax profit margin for this new contract is still within the 9% and 11% range. With this win, Pestec's order book is increased to 1.6 billion ringgit from 1.5 billion in September, which will keep them busy for the next 2 years and sustain earnings growth. That aside, Kenanga also sees vast potential in the Philippines for transmission line and substation EPPC projects, as a third of its population is still without access to electricity supply. There is opportunity in a rail electrification project in the country as well. Pestec is participating in the tender for the North-South Commuter Railway for the South Luzon portion with a contract value of 400 million ringgit. There are also other rail projects available for tender, such as Bangkok's MRT Orange Line's rail electrification work, Taiwan's Cycle Line's work, and the RTS line for the JB side. Now its share price has rebounded strongly by 40% from the recent low of 68 cents in early November, which Kenanga says is likely due to investors buying on weakness. But even at its current price, the stock is trading attractively at 1.5 SD, below 5-year PBV mean of 1.21 times. Kenanga says it continues to like Pestec, which could potentially benefit from the revival of local mega projects and the fast-growing energy infrastructure development market in Indochina. So what's the consensus? According to Bursa Marketplace, Kenanga is the only research house to cover the stock. So to recap, it's a target price of 1 ringgit 15 versus the stock's last close of 97.5 cents.